Respected CA Nihar Niranjan Jambusaria ji, Honorable President of the Institute of Chartered Accountants of India. Respected CA Devasis Mitra ji, Honorable Vice President of the ICAI. Respected C. Atul Kumar ji Gupta, Honorable Immediate Past President of ICAI. Mr. Sanjay Rugani, Chairman PEB IFAC. Mr. John Turner, CEO XBRL International. Mr. Girish Kumar Upuluri Venkata, C22 Lead Technologist. In absentia, Professor Sudhir Sinha, Mr. Kiran DM, and former Cabinet Minister, our own respected C.A. Suresh Prabhuji, and my dear friend in the Council, C.A. Niket Sunil Talati, Vice Chairman of the Institute of CSR Committee of the ICAI, and my brothers and sisters in the profession. Friends, at the very outset, let me heartily welcome you all in this global webinar organized on the very important topic CSR, Global Perspective. Suswagatam. Friends, today we have deliberations on various topics and a panel discussion on global development and best practices in CSR. Our resource treasure today is filled with in-depth knowledge, experience, and exposure on the subject. Being the chairman of the CSR committee of ICAI, I shall brief on the Indian perspective of CSR. Friends, Kautilya, a noted economist of ancient India, long back, emphasized on ethical practices and principles of conducting businesses. I'm happy to share that India is the first country in the world to introduce statutory corporate social responsibility through the New Companies Act 2013. Prior to this landmark development, CSR was not a new concept in India and can be traced in the historic pieces of evidence. India has the world's richest tradition of, I can say, social responsibility. Though the term CSR is comparatively new, but the concept itself dates back to over a centenary. The origin of CSR can be traced from our Upanishads, Puranas, and Vedic literature, and also various Dharma Granths. As is common wisdom, Indian companies have been engaged in CSR, charity, philanthropy since time. In most instances, these were treated as act of philanthropy, act of charity, or we said in past that owners are giving back to the society. Friends, if we witness, if we go through, we will find that various schools, various hospitals, various water resources, various dharmsalas are being created by various Indian business houses in the past. CSR in India has evolved through different phases like community engagement, social responsible production, and socially responsible employee relations. Now I would like to tell you about some of the provisions of the CSR in the Companies Act 2013. Friends, now any company in any financial year, if their net worth is rupees 500 crore or more, or turnover of the company is rupees 1000 crore or more, or the net profit of the company is rupees 5 crore or more, then 2% of average of profit after tax of previous 3 financial years of that company shall have to be spent on CSR. And this is given in the statute in the Companies Act by incorporating in section 135. Now a CSR committee has to be formed, and if any entity is interested to do the CSR activity, they will have to register with effective from 1st of April 2021 with the government. The CSR committee, which was formulated, shall recommend the CSR policy to the board. And friends, now if there is any amount which is unspent, whether it is ongoing project or it is normal project, shall be transferred either to a fund specified in Schedule 7 or to an unspent CSR account within notified time. And now there are penal provisions also. If the company does not transfer that amount to the fund unspent CSR account, then a penalty of the double of the amount or rupees 1 crore, whichever is less, and penalty provisions are also on the officers who are responsible for that. Friends, there are recent developments. Now, if there is a mandatory provision that if the project size is more than 10 crore or more, then impact assessment is compulsory. Now, focus is on the impact assessment. And now, role of international organization in planning and execution and the development has increased. And there is a cap of 5% on administrative expenses. So there are certain things. And now, friends, I would tell you few things about the business responsibility and sustainability reporting, BRSR. This is new term in our country, but recently SEBI has made it compulsory from 22-23 to minimum 1,000 companies according to their capital in our country. So friends, with this, I can say that now in CSR, our country is ahead of so many countries and is at par with so many countries. And I expect that applicability is proposed to the provision that it will be applicable to all the companies, even on LP in next 5 years, will make a big change. With this, I'm happy to submit that this CSR webinar will make a change in the thought process of our members. And I'm thankful to my leaders, Honorable President and Vice President, for organizing this type of webinar on our platform. So thank you very much, friends. I again welcome you all. Thanks a lot. Thank you very much. Over to now, I would request our Vice President, CA Dr. Debashish Mitra, for his address.
Thank you very much. Yes, thank you very much, Chairman of CSR Committee, Satish Gupta ji, immediate past President of the Institute of Chartered Accountants of India, Atul Gupta ji, my President of the Institute, CA Niha Ranjan Jambusaria ji, Sanjay Rugani ji, John Turner, Suresh Prabhu ji, Girish Kumar, and of course, my young friend, Aniket Talati, who happens to be the Vice Chairman of this committee, and everybody, very, very, good evening from India. And I'm very happy that the CSR Committee of the Institute is organizing this program on CSR on global perspective. The Chairman of the committee, Satish Kumar Gupta ji, already, gave us a brief introduction of Section 135. Now, when this section was, introduced, and this is part of the Companies Act in India, when this was introduced in the initial stages, effective from 1/4/2014, there was this great criticism at that point of time as to whether a government could make certain categories of companies to compulsorily contribute to CSR. And the categories of companies, Satish ji has already said. But at that time, the government stated that, look, even if you don't contribute, there is no penal consequence on you. And you just have to explain the reasons as to why you did not spend that 2% of the average net profit for the past 3 years, in the board of directors report. The corporate India at that point of time was, saying that you cannot make us, CSR is voluntary, and you cannot really force us to make a CSR payment by way of an insertion in the Companies Act. But the government stood its ground, and the CSR expenses and the CSR provisions stood the test of time. What happened was, along with Section 135, the government introduced Schedule 7 to the Companies Act. And this Schedule 7 lays down the kind of projects that one can do under CSR. And this Schedule 7, over the period of time, underwent a lot of changes. And is the latest being that even the COVID-related expenses can also form part of your CSR expenses. And Schedule 7 lays down in details what are the kind of expenses that you can incur. Now, those of us who are hearing me, and I speak a bit more because I can see an international audience in front of me. I can see Mr. Turner here. Let me tell you, I was saying that, you see, there was no penal consequence. But then the government found that, you see, a lot of companies were not really, going ahead and contributing that 2% to CSR. Then they decided to make a change. The change was that, if you don't spend that money of 2% of the average net profits of the past 3 years in CSR, in that case, the amount that you don't spend, either you contribute that to a fund which is mentioned in Schedule 7, and the fund could be the Prime Minister's National Relief Fund, or otherwise, you keep that money set aside by opening a separate bank account of the company and use that funds in the next 3 years. So this is the new change that has taken, that has been recently introduced in India. And what has also come is, they are also saying that now, we are going to introduce penal consequences if you don't invest that 2%. And this penalty, let me tell you, was not, it was in the initial times registered by corporate India, but now, they have come to accept it. So the point I'm trying to make is, in India, the government is extremely, extremely serious about the CSR expenses and this provision that is there. An issue, of course, arose regarding the two issues. One issue was the tax deductibility of the CSR expenses. And the government, till now, of course, it might change its position later, is saying that the CSR expenses cannot be a tax deductible expense. Under Section 37 of the Income Tax Act, you cannot really claim that as a tax deductible expense. Where the Institute and the CSR committee has done a lot of work is, we have published a book on the technical guidance on CSR accounting. The book, that's a technical guide that we have published, and it is quite a detailed treatise on CSR, the way you account for it, and account for it in the new, in a regime where there is a change in the CSR, where you are almost made mandatory to contribute that 2% to CSR. So, in India, we are having these huge changes as long as CSR is concerned. Corporate India has now got accustomed, and they are contributing and complying with the provisions contained in Section 135 of the Act by way of having a separate CSR committee. Then CSR policies of the company are published in the website of the company. So, and I would like to think that India might be one of the very few countries in the world which legislates and regulates CSR. It might be one of the very few countries in the world. And let me tell you, a company wanting to spend on CSR may have a project of its own, or might even, contribute to a trust or a society to carry out these CSR projects. So this is, in a nutshell, the way CSR is in India. And let me tell you, I believe that, it is now being complied with to a great extent. The government does collect data on the compliance of CSR. And at the Institute, we being a partner in nation building, we work hand in hand and with the government. And whenever the government says that, can we have your suggestion regarding whether CSR should be tax deductible? Can we have your suggestion regarding what to do, how to account for CSR? The Institute always comes forward and provides suggestions to the government. I'm very happy that CSR committee of our Institute, under the chairmanship of Satish Kumar Gupta ji and vice chairmanship of Aniket Talati ji, is organizing this program. And I have no doubt that those who are participating in this program will find their knowledge on CSR enhanced after having heard the speakers of such repute who are part of the panel today. So needless to mention, I wish this program great success. Thank you very much.
Thank you, sir. Thank you, VP sir. Now my request to our Honorable President, C. Nihar Jambusariyaji, for his address. Honorable President.
Thank you, Satish ji. Good afternoon, good evening to everybody. I am sure that there are participants from India and abroad, and there are speakers from India and abroad. So we will have global perspective of CSR today. The Vice President of the Institute, CA Dr. Debasis Mitra, immediate past President, CA Atul Gupta ji, the Chairman and Vice Chairman of the committee, CS Satish Gupta ji and CA Aniket Talati, Sri Suresh Prabhu ji, who will be joining in some time, Sanjay Rugani ji, who has already joined, John, who has already joined, Girish ji, Sinha ji, and Kiran ji, the panelists for today's CSR discussion. Let me compliment the committee for organizing this webinar at a very right time, when not only India, but in the entire world, there is a talk about CSR, there is recognition of what CSR is delivering in terms of value. And in today's discussion, I'm sure you will be covering what are the legal requirements for CSR and how in terms of environment, social and governance, we look at CSR and make it an absolutely systematic activity. The Vice President and the Chairman narrated the provisions which are applicable in India. In other words, CSR is a mandatory spending so far as India is concerned, but I was looking at the requirements in other parts of the world like USA, UK, some European countries, Denmark, Gulf countries, and I found that none of the countries has so far made CSR spending mandatory. So in terms of mandatory spending, the panel may discuss whether it is too harsh. But if you look at today's scenario, if mandatory spending is a compulsion, then every company would deliver value and deliver what is required. Particularly if you look at the sustainability efforts of the world and the SDGs, which are taken seriously by every country of the world, I think probably going forward and eventually in other countries also, the governments may think of making CSR mandatory. Today, look at India's situation. In last 3 months, the second wave of coronavirus spread at a speed which was not expected by anybody. But the speed at which COVID spread in the last 3 months, at the same pace, the corporates came forward to spend and provide relief to those who were needing various infrastructure facilities like oxygen or concentrators or ventilators or beds in hospital. And this CSR only has saved the lives of many. The coronavirus is coming under control. And looking at this situation, I think for India going forward, healthcare and climate change would be the top priority. It is expected even third wave may come to India. And even otherwise, if you look at the way climate is changing, healthcare facility would take priority in India and other countries of the world. Even climate change, everybody is worried about the existence of Earth itself where we stay. And there is a report that whatever Earth produces in 12 months, the human beings consume in 7 or 7.5 months. So we are pouncing on the resources which are reserved for the future generation. And it is well said by somebody that Earth produces enough to meet the need of humankind, human beings, but it does not produce enough to meet the greed of human beings. And we need to really assess whether we have become greedy in terms of enjoying the resources, and probably the manner in which lockdowns are implemented. And this pandemic taught us that sitting at home or in one place, we can deliver what we can physically deliver. So let us introspect, think about CSR as a mandatory activity or voluntary activity, and let us infuse a lot of discipline into this activity. As much as the profit is important as a bottom line, I think now as the Indian government has also accepted that people and planet should also be reported as a bottom line in the financial statements by way of reporting by the corporates. So this brings a lot of discipline, and it shows seriousness of the government in terms of what it expects from people, from corporates, and what we really need to do. So at very right time, we have international perspective today, we have local perspective, and with the combination of both, I think the participants will have wonderful time, and we need to look at our future and our activities in terms of what will be discussed today. In India, as it was rightly mentioned, business responsibility and sustainability reporting has become mandatory for top 1,000 companies. Going forward, this may become mandatory for small size corporates also. In India, we have started speaking about even individual social responsibility. And the time tells us that we should be individually responsible, corporates should be responsible, along with government and NGOs, to produce a better world to live in for tomorrow. So with this, I thank the CSR committee, both the chairman and vice chairman, for having thought about this webinar at a very right time. And I'm sure this webinar will deliver a lot of value to the listeners. Thank you so much for inviting me.
Thank you very much, President Sir, for wonderful deliberation and for enlightening all the things which are present in our country and the abroad. Now my request to Mr. Sanjay Rugani, Chairman, ICAI Professional Accountants in Business Advisory Group, who is CEO of the Standard Chartered Bank in Tanzania. Mr. Sanjay Rugani will deliver his address on taking CSR to the next level with climate action. Mr. Sanjay Rugani.
Namaskar. It's an absolute delight to be talking to you all. My name is Sanjay Rugani. As you can appreciate, I look very Indian, but I'm talking to you from Tanzania, and I'm a Tanzanian citizen. As mentioned, I'm the current chair for the International Federation of Accountants for Professional Accountants in Business Advisory Group. I also want to say that I'm the CEO for Standard Chartered Bank. I also chair the CEO Roundtable in Tanzania, which is the top 150 companies in Tanzania. And I'm also the deputy chair for the Bankers Association. So my perspective as I'm talking to accountants, one is because I used to be an accountant for the last 20 years before I became the CEO, but also from a global context being part of IFAC. At this time, I first of all want to congratulate President Chambusariaji and his team, and also the team of the CSR committee. I won't go into names. I think they've been mentioned many times, but I do want to say all protocols observed. My heart goes out to India. My heart goes out to India. I have family there. It's a very difficult time. You know, we are talking about the pandemic, and I'm sure everybody on this call, and Shri Atul Kumarji told me that ultimately there's going to be about 20,000 Indians and many other global listeners who are going to be going through this webinar. So congratulations. But also at this time, our prayers are with you all. We all feel India at this moment. So please take that from IFAC, but also from all the global citizens. I do want to congratulate the Institute for this bold move. Making CSR a key part of the strategy is extremely bold. But I also want to say that to all the things that the President spoke about and my previous speakers, I want to remind India that the concept of Seva is CSR in essence, actually was born in India. There is not many countries that have the kind of history and the kind of culture that India has in terms of Seva. So all we need to do is we need to do bigger Seva. We need to do bigger Seva to everybody in a very different concept. And I like what the President said, that there is not many countries that have made CSR mandatory. I think we were born with Seva as mandatory. So how we are using the mandatory cost aspect with the mandatory behavior aspect, and I'm talking about behavior here, which is the behavior in terms of Seva, is also going to be very critical. So let's take this time together to make the most out of it. I'm just going to do a quick presentation that I've put together for everybody, and I'll talk through that. Great. So, clearly my discussion today is really taking CSR to the next level, as a profession. A couple of very important things. This is extremely important to India. I think my previous speakers have spoken about it. It's actually been in the mainstream of the Indian government agenda since 2005, when we've committed to reducing carbon emission between 30 to 35% as part of our SDG commitment to, for the year 2030. Now, the good news is that we are on track. And maybe the pandemic to some extent has supported us because the earth is healing. But the reality is when India created the strategy of impacting SDGs, one thing we forgot is that the world is also in a different challenge. So whilst we have committed to a 30-35% reduction in carbon emission, the demand is actually to elevate that to 60-65%. The next point on my slides is really about companies and financial sector prioritizing climate action. Now, we listen to what SEBI is doing, what many companies in India are doing. Being the CEO of Standard Chartered Bank, I want to tell you that, for us, planet, people, prosperity, and then profit is the way we work in terms of our strategy. Climate is very critical. We have made a huge commitment and a bold commitment to becoming net zero in terms of climate, by 2040. But we are also helping many companies in terms of funding, supporting them as a financial institution to become also net zero or stop emitting carbon. And this is what's happening in the banks in India also. So as accountants, you need to look at those opportunities to fulfill your ambitions also. In terms of the accountancy profession, enabling the transition, I like what Niharji said, when we talked about COVID. The reality is for India, the first biggest pandemic is COVID. The second biggest pandemic is climate. Now, the medical doctors and the medical professionals supported by Seva, CSR, are taking all the right actions towards the pandemic, and we still have a long way to go. The role that the medical officers are playing in terms of the pandemic of COVID is the role that is expected for accountants to play when it comes to climate. And I know we are talking CSR in bold terms, but I think when it comes to climate, that's the role we need to play. So if you start thinking about it from today, if you haven't, that's going to be very critical. I just want to move in to say accountants and auditors are doing their part on the ground. Of course, there is much more to be done. Your role to advise the clients and employers is extremely critical. You need to support the strategic operations and financial management. So whether it's scenario analysis, bringing climate in the forefront of your strategy of the companies, giving data insights, not only in terms of risk, but in terms of opportunity, and also talk about sustainability of business. And then finally, providing the information needed to take action. Remember, you are a conduit of change. Many times, the biggest power the accountants have is IFRS. So think about all the IFRSs that are necessary, because in long term, if you do not behave well and you see the risk, as an accountant, you have to do what? Prudent accounting. And you'll have to start actually making provisions for not being a climate change action person. So it's better you take the right actions and grow the wealth of your organization. I also want to, at this time, implore the accountants to start thinking, moving their thinking from profit to really valuation. Valuation of the company is going to come from your effort that you make to drive the business to become more responsible. Just stepping back as a CEO of Standard Chartered Bank, there are three players in any equation. There is the business, there is the general population, the janta, and then there is the investors in any business framework. For many years, the janta has been asking or demanding from corporate India, to become more responsible in the way we are doing business. I think last year, the big change that happened is, the CEO of BlackRock in the beginning of the year, and BlackRock manages, Larry Fink, they manage $8 trillion of investments in the world. He wrote to every company and said, if I'm making investments, I want you to tell me what are your climate actions. So what I'm trying to bring to your attention is the population wants the right, action around, making sure that your business is friendly and is fair, but is responsible. The investor is demanding that. What you need to do is make sure that your business is not only responding to it, but is also demanding. And that's the way we create a win-win equation. Just moving on to the next slide is really that, accountants are really empowered. The fact that ICAI is talking about this gives you the mandate. If you can tomorrow morning walk to every office and say, we heard the ICAI, they've made this a key part of, and made it mandatory for every accountant to champion, you'll have empowered yourself much more bigger. So what I'm talking about is CFOs and practitioners need to be empowered. So besides the ICAI, I think what is important is, and I am a CEO, and as I said, I'm the president of the CEO Roundtable here, is making sure that every CFO empowers, every CEO empowers the CFO to make this a key part of the solution or key part of strategy. Climate and sustainability should be moved to the CFO. I think it's a very critical aspect. Like I said, for the pandemic, the medical professionals are championing in this. For sustainability, CSR, and climate, let's move to the CFO. Remember, the Future of Work report, global report from World Economic Forum says that 68% of everything that you are doing as a traditional accountant is going to be digitized. This is the best value you can start generating with yourself as a future accountant, which is really about moving into the value add, so whether it's integrated thinking, integrated reporting, much more driven by a CSR concept. And finally, the auditors need to also make sure that, as accountants, they make climate, CSR, and sustainability a key part of their KPIs. This is my last slide, talking about the 4 key areas that you need to understand. And as you are championing the cause, number 1 is know your emissions arising from business models and its products and services. I'm sometimes very shocked that accountants don't even know what carbon emissions mean. Please, let's stop petty thinking. This is your time to emerge as a champion. The world is demanding that of you. So it's better you demand that of yourself. So learn and understand what kind of emissions is your organization really, giving out. And the best way to do this is looking at your balance sheet. If you look at your balance sheet, you'll see what are your fixed assets. It's infrastructure, your properties. What are the things? Equipment, your processes, your people, your investments. If you start looking at everything from the concept of emission, you will start understanding what your business model is. You do need to integrate, climate is a key part of your risk metrics. This is very critical. I would actually encourage all the accountants to do scenario analysis. If you don't take actions, what that means. If you take actions, what this means. And finally, as I end this slide, tell your story. Tell your story to your stakeholders, your investors, and also your clients, because the future of this world will belong to those accountants who drive responsible business. Like I said once more, the demand is there. You need to just optimize on this opportunity. From my side, again, from IFEC, I just want to congratulate ICAI and for all of you to take time in this engagement. This engagement has a big meaning, not only for you as a professional, but for you, your family, and the bigger world. God bless you all in this journey. Thank you. Thank you, sir.
सतीश जी आप म्यूट पे हैं.
Thank you very much, Mr. Sanjay, for showing us the new path of an opportunity to we chartered accountants. And keep safe and take care. Now, I welcome Honorable Sri Suresh Prabhuji, Honorable Member of Parliament and Prime Minister Sherpa to G7 and G20 groups. He had been our cabinet minister, not only for railways, not only for commerce and industry, not only for civil aviation, power and environment and forest, but also for the chemicals and fertilizers. And more, he is a chartered accountant by profession, so our own, and he passed the chartered accountancy exam with the merit, having the 11th merit. So we welcome you, sir. I, on my personal behalf, on behalf of my president, vice president, and immediate past president, I welcome you, sir. So I will request Suresh Prabhuji for his deliberations on CSR in times of COVID-19.
Thank you, Satish Kumarji, and thank you, my other distinguished friends, my professional colleagues, and all those who are participating in this program. I'm very happy that just now Mr. Rugani made a very good presentation on climate change. And therefore, I will not get into that because that's a very sensitive issue to me. If I start speaking about it, it might take another 2-3 days to conclude. So this is a very important program that you organized today on the role of CSR into fighting challenges of today. And as just now Mr. Satish Kumar Gupta said, I should speak about pandemic and CSR. Before I do that, let us first understand that you cannot deal with a small little issue. Of course, pandemic now has become a very large issue. But if you really compare it with the kind of challenges you'll face in the future, not in India, globally, I'm saying, the global challenges, the pandemic may be just the tip of the iceberg. We must understand the integration and interconnectivity, interrelationship between so many factors. If you don't understand the ecology, the economics, the employment, the society, the implications it has on political system, will not understand the ramifications of the challenges that we are facing today. Pandemic started as a health problem. Now it has become social problem. It has become economic problem. And in some countries of the world also has become a political problem. So while we deal with all this, we must understand the holistic nature of dealing with an issue. As chartered accountants, we are probably better equipped to do that than any other professional. So my first request to all of you would be that while we deal with a particular challenge, which is now manifested as a pandemic, we should first understand that unless we deal with the holistic issues on a long-term basis, on a medium-term basis, we'll keep facing such short-term problems that we are facing today in the form of a pandemic. For example, so climate change will look like an environmental issue. But where did it start? Where did emissions start? It started after the first industrial revolution. So what is the starting point? Is an industrial activity. Why there are more emissions after that? Because of a livelihood, because of a lifestyle. People want to have, in some countries, lights in the buildings burning throughout the night. There are some countries have more than 3-4 vehicles, and that too SUVs, which are huge guzzlers of energy. That itself emits. So lifestyle, industrial activity, economic activity, all are responsible for emissions. And then emissions does not lead only to climate change issues. It leads to so many different challenges. Biodiversity gets lost. So what its meaning is, unless you understand the holistic nature of how the system, the nature operates, will not understand. So first and foremost, we all must deal with problems, not when they get manifested, but you must understand that why should we give rise to a problem to begin with? Why don't you go to the root cause of not allowing a problem to arise to begin with, rather than dealing with a problem when it is manifested as a problem and try to deal with it in a reactive way? As CSR is normally associated with corporates. It's corporate social responsibility. The corporates also must understand that if society is not doing well, corporates can never do well. So it's not corporate social responsibility, it's their obligation. Their fundamental reason why they should focus on making sure that unless the society is better off, you cannot deal with in a particular way. I feel that to keep society happy, society contented, society prosperous, is the best way the corporates can get the dividends out of it. Because corporates want to get a share of a market. What is the market? The people, if they don't go to the market to buy, where is the market? And therefore, the people's happiness, people's satisfaction is a fundamental starting point for the corporates. And when will people get happy and satisfied? Which I mentioned earlier. If integration doesn't happen, if you don't look at the holistically at the issues, somewhere the other, the distortion that happens because you are looking at holistically, will give rise to a problem. Like today, the pandemic may look like a health problem, but it has arisen because of animal-human conflict somewhere. It has happened because animals have lost habitat. It has happened because a virus has escaped from animal and entered humans. And there could be many more such things happening in future if you lose biodiversity. So the biggest challenge for a corporate to begin with is to ensure that use their managerial expertise besides their financial power to create proper awareness about the need to deal with societal problems at a holistic level. Help governments to draw policies to do that. Help societies to be aware of this and also therefore change their lifestyles accordingly. The public policy and lifestyles both must change at the same time, and corporates can play a key role in shaping public policy as well as helping people for lifestyle. For example, there are some companies keep marketing products which people accept it because they get influenced by the advertisement that happens and therefore they buy it, which causes so many problems eventually. So why do corporate do not take a responsibility of not marketing products which eventually will create not just health problems, but even larger problems, as I said, of dealing with the ecosystem, and therefore the holistic problems will not be addressed. Coming to this present situation, I wish that all corporates now focus on issues related to healthcare, at least for the foreseeable future. Because people's lives are very important. If they don't live, where is the person that is going to buy from you? People are not healthy, your workforce, where is going to come and work for you? If they are not, they are suffering and therefore the public money is lost into taking care of healthcare, what are going to happen to the corporate, the purchasing power of the society, and therefore corporates will not get what they want. So in their own interest, corporates must now focus on helping pandemic, fight pandemic. To do that, you have multiple options. I think corporates must cooperate and collaborate with NGOs. I don't expect corporates, like one who is making steel, a corporate entity, to now get into healthcare and start doing this. That's not a core activity. But there are many NGOs who are doing a phenomenal work in that area. Corporates can handle with them, partner with them, and help them to deliver better healthcare services to the people at large. On the other hand, the corporates and government must join hands, because there are healthcare budgets and there are corporate social responsibility budget. If they can be leveraged, you can imagine the managerial ability of the corporate to deliver better services, with government sovereign power standing behind them and the NGOs helping them with a heart which is fully devoted to the cause. You can imagine the transformation that can happen. I'll give you an example. We run an NGO called Manav Sadhan Vikas Sanstha in Konkan in 2000 villages. There are 450 Parivartan Kendras we have created. We dispense these services to the people on the ground. The top Fortune 500 companies have joined hands with us because they realize that they cannot render the services unless they join hands with NGOs like this. Because NGO comes with full dedication, full commitment, which may be lacking many times when the people are asked to do job because they have been paid for it. There are the NGOs, and not all, but few NGOs who do the job because not for money, but for a satisfaction, the happiness they derive from it. So we need to partner with such things. And in today's pandemic, I am sure the corporates should devote their entire budget for this. I am a member of parliament, you mentioned. I gave life-saving ambulances to Andhra Pradesh and Haryana from where I was member of parliament. It is saving lives today. I am giving diagnostic center for each and every district in Andhra Pradesh. We are trying to do the same thing in coastal Maharashtra. So we can do so many things if we join hands. So today, I appeal to all my corporate members that devote your entire CSR budget, at least for the next 2-3 years, for healthcare facilities. And to get better results out of it, partner with governments, local governments, state governments, and also national government. Also partner with civil society organizations like NGOs and try to deliver better results for the people. I hope you do that. And I know there are so many other important presentations which will be made. And my dear friend, the former president, Mr. Atul Kumar Gupta, I can see him on the screen. And I think he's a star. Probably the people who come on the screen are stars. So he's come on this particular screen, but he has been a star of the institute. So I wish that we all will work together. I congratulate the Chartered Accountant Institute for organizing this program. My request only to my fellow Chartered Accountants, let us not end this program with this eventually closing remark that will happen at the end of it by Mr. Talati, who is the Vice Chairman of the committee. But let us, that Mr. Talati's final presentation should be the beginning of a process. Let us create a institutional framework, which I just mentioned, wherein we can bring corporates, governments, and civil society on the same platform. I can help you to work with you to do this, make it happen. I can help the corporates with all my 25 years of experience in as public servant, but before that as a corporator, as the chairman of the bank for another 20 years. So 45 years of experience I can bring on table to help you all to shape right policies and help you to reach out to the most needy people in the country with a least cost option. We should not spend money unnecessarily where it is not going just best. but use each and every money, every part of that money for betterment of society. And that should be the objective of this. So let me thank you. Let me wish you a great success in this endeavor. And again, my request to my fellow chartered accountants, my alma mater Chartered Account Institute, that let us create this platform, which I can help you to shape, and then we'll ensure that we reach out to as many people, as many needy people as possible. Thank you very much. God bless you all.
Thank you, sir. Thank you for guiding us that pandemic is not only affecting health, but also affecting our economy and society. And you also show us the importance of holistic approach. And you just inspired us to identify our own side and how can we join hands with the government and other things. And we respect your call that all companies should devote their CSR fund to health. Sir, I would like to tell you some of the initiatives of this committee of the ICAI. Sir, we have formed the task force at every branch this year to fight with the COVID, and our branches are helping all the society who is in the need by doing the efforts to provide beds and to provide the oxygen concentrators, to provide the plasma and the medicines also. So, and food also, sir. So they are doing great, sir. And sir, we at ICAI have also allowed the grant for blood donation camp and grant for vaccination camp. And apart from this, sir, our CABF, your own CABF, is also giving the aid to our members in case of need in COVID cases up to rupees 1,50,000. So, and sir, one more thing which I would like to share with you, that we have started this year individual social responsibility, ISR, at our ICAI, and we are taking the feedback of our members for who are doing the social cause. Thank you very much, sir, for coming here. I, on behalf of the President, Vice President, and all the members of the ICAI, thanks to you with the heart. Thank you very much, sir. And sir, now I would request Mr. John Turner, CEO XBRL International, who had been the CEO of Core Filing also, for his address on use of structured data in CSR. Mr. John Turner.
Mr. Vice President, Mr. President, honored guests, thank you very much for your time and your attention today. And this topic could not be more important. Thank you very much for the past speakers who have provided a very rich framework within which to think about this. I would like to share a few thoughts about what is happening in a number of international contexts. It is certainly true, as has been pointed out, that the Indian work and Indian policies and laws in this field have been very important and are certainly showing the way for many other parts of the world. But let me spend just a little bit of time describing what we are seeing in some very rapid changes in this field of CSR or ESG reporting throughout the world, and what that means for you. So if I may, I'll share a screen here and we'll just work through a few slides. Thank you very much for your time. For those of you unfamiliar with XBRL International, we are the standard setter that provides the digital framework, the digital rules that permit regulators and governments and companies to define information that they want to collect from large numbers of regulated companies or others. This is a very important part of the reporting structure in the accounting world in India. There are 181 mandates around the world in about 70 countries, covering more than 30 million companies today. We are helping the process of shifting reporting from paper to data in the 21st century. Everything is about what can I analyze rather than what must I read, consume, and retype from paper or things like PDF, which we call paper under glass. So XBRL International acts to do that. In the past 2 decades, our focus has been very much on financial reporting to regulators like the Bank of India, and as well as securities regulators and business registrars around the world. But right now, our #1 focus is very much in this field around ESG, as we're seeing some enormous changes. And I just thought I'd like to share a few thoughts about that today. So if I start with just a nomenclature question, although CSR has been the term that we are all familiar with for a long time, and clearly this process of providing corporate focus on the needs of society has been a very important thing in India even before 2013. Around the world, quite quickly, this term is being changed into sustainability, and that encompasses a number of things. It certainly encompasses the E for environment, the S for society, and G for governance. So a whole host of information and disclosures about the broader health and the future health of organizations. But the number one focus around the world is very much around climate change, as we'll come on to. The way that the world is shifting is, it appears, this is literally changing week by week, but it appears that there is becoming global consensus, helped very much by IFAC, as well as institutes around the world, such as ICAI, to ensure that there is global comparability in this field. However, we all need to recognize that different countries have got different requirements and different priorities. So the intention, it appears, very much supported by groups like IOSCO, the International Organization of Securities Commissioners, is working towards this idea of a building block approach. So there will be a consistent set of disclosure standards in this sustainability space, but different countries will put different emphasis on those building blocks, use different parts of a smorgasbord of reporting requirements in this field, and that will therefore dictate different types of reporting, either in terms of timeliness or in terms of urgency in different countries. But that said, this is a very rapid shift in the attention and focus, not just of investors, and BlackRock is just the tip of a multi-trillion-dollar iceberg of investors, much more focused on the broader impacts, particularly the climate impacts of corporations, big and small. But it also marks a significant focus by policymakers around the world at national and international levels. So this is a pretty simple idea. You can't manage what you can't measure. So whereas there has been in many countries a voluntary range of disclosure rules imposed on companies for a number of years, that information has been difficult to use. It's been very difficult to compare for a number of reasons, not least the fact that that information has not been based on consistent standards. That information has not always been auditable, and it has certainly not always been digital. So in the policy shift that we're seeing very much in 2021, this is accelerating very quickly. We're seeing three key points around this whole sphere. The first is that this information needs to be, on a global basis, consistent. It does need to be auditable, and it does need to be digital. I think that that has a very direct and important impact on India and the Indian profession for a number of reasons, as well as for all of the members of ICAI right around the world. Why India? Well, and why this focus on climate change? Well, as we all know, I think everybody on this global call understands that climate change is everybody's problem. And in addition to the tragic consequences of the pandemic, which I think the honourable prior speaker was exactly right to say is likely to be just the tip of the iceberg of what is coming down towards us. We need to be all conscious of the impact of climate change on all of our economies, our societies, our communities, and indeed our companies. And the idea of ESG reporting in the sphere of climate change is that providing a host of comparable information that can be used to both change the way that investors think about their options in terms of investment, changes the way that supply chains work, and changes the way that policymakers think is very important. It's not just a question of being able to measure things, but if you have the right data, then you can make decisions based on the right data. So I can't underline enough the fact that the shift at an international level from ESG reporting being a secondary issue, being a tertiary issue, being perhaps a compliance thing, frankly, being an area where there is a lot of what they call greenwashing, companies perhaps making themselves to look perhaps better than they are. Those things are going by the board. There is a massive focus around the world on ensuring that this information becomes investment grade and decision useful. And this is, I think we should all be familiar with and aware, be thinking about how this plays out over the next few years. This is a question of both carrots and sticks. You will have heard in many forums and in many contexts the fact that climate-related disclosure, and in particular carbon emission disclosures, are likely to alter the way that investors think about particular companies. Oh, here's an energy company, but they are shifting their capital investment towards renewables. Perhaps that's a better bet than this one over here that is very much focused on coal. That carrot approach is certainly true. It goes well beyond the truly carbon intensive companies to entire supply chains and understanding how all of that works. But we also need to recognize that as in particular carbon, the impacts of all of our carbon emissions become even more widely felt, we can be very certain that there will be another side of that. That is sticks. You can think of this in terms of carbon taxation in numerous areas. Today we're familiar with cap and trade, but carbon equalization measures and other things on different economies will be part of our not too distant future. So we should be bearing that in mind, and to a certain extent, providing a consistent global set of rules to ensure that this information can be used for both carrot purposes and stick purposes is foremost in the minds of some policymakers that are looking a little further down the track. So I said that there were three key measures, and this is what I just want to touch on. The first of these is consistency. You may be aware that there very recently, even in November last year, there started to be a formal call for the IFRS trustees, that is the group that governs the International Accounting Standards Board today, should create an analog to the International Accounting Standards Board that is clearly focused on accountancy, to develop a new set of standards under a new body called the International Sustainability Standards Board, SSB, or increasingly people are referring that to ISSB. And if you haven't come across that, please do read some of the materials that are available on the IFRS website about these very rapid developments. There's also a lot of useful information about this from IFAC and from IOSCO, so please do keep an eye on those things. This is moving quite quickly. But nevertheless, from consulting, would this be a good idea, to extremely quickly, the IFRS trustees have now recently, just last month, announced that they will certainly propose to alter their constitution and to create an ISSB to sit alongside the IASB, and indeed that these two bodies should be cognizant of what each other is doing. There are strong linkages between financial reporting and ESG reporting of various kinds. Clearly, that is not the case that the SSB intends to start with a clean sheet of paper. They have stated on many occasions that they will be taking best of breed and pulling together all of the rather dispersed carbon and other sustainability standards that exist around the world, pulling those organizations and those standards together to develop something that can be utilized at an international level. Now, I say international level, but clearly there is a question as to exactly who will use these things. We know that Europe has mandated that relatively recently, and that's through the Corporate Sustainability Reporting Directive, which was just announced, whatever it was, 5 weeks ago, and will become law in Europe towards the end of the year. That is going to start very quickly and will in all likelihood be initially using locally developed measures, but they have stated that they will be moving towards both contributing to and using those international standards. So you're used to the IFRS standards, you're experts in the IFRS standards. There's going to be a new set of IFRS standards for you to become expert in, and those will be promulgated by the SSB. I just want to touch one point on the importance of carbon disclosure, particularly in relation to companies of all sizes. All of these policy measures have announced that they will be starting with carbon disclosure, and indeed they will be starting by implementing the disclosure rules that take into account the recommendations of the Task Force on Climate-Related Change, the TCFD, something that was chaired by Mr. Bloomberg a couple of years ago. And the TCFD requires that companies do indeed disclose scope 1, that is your direct emissions, scope 2, that is the emissions related to the production of energy that you use as an individual corporation, and in many, perhaps as things move forward, most cases, scope 3, which means the supply chain carbon emissions that have been created as a result of the activities of a particular corporation. You just need to think about that for a moment to recognize that that's a very complicated network of disclosures that will need to be connected and interact. But that does mean that supply chain data is key. So even if you don't work for some huge corporate that will be caught up in some of the first disclosure rules in Europe, Japan, the United States, or indeed India, you may well work for a company that provides aspects or materials that are used in the supply chain of those corporations, and they will be asking you for information that is reliable and that can be consumed for part of this process. So that's the first thing to be aware of, the SSB's creation, which is expected in time for COP26 in November, the next climate conference. The next point is that all of this information needs to be auditable. It is extremely clear that Europe, and we can be fairly convinced that many other major markets will be working in this area to ensure that all of those new types of disclosures are indeed audited. So that means we need auditing standards in this field. So the IAASB is accelerating their efforts in this area. There are already a range of materials and guidance that can help audit professionals in this context. But again, just like there is a rule book on the way for the disclosure, we can expect a deeper, broader, and more important rule book that is very much part of our operations going forward around the review and assurance around the disclosures by companies and even organizations in the ESG area. And then the last point that I want to make, unsurprisingly, as I come from XBRL International, is to point out that already coming to Europe, we're very confident it will happen in Japan. It will certainly happen in the US when the US later this year starts to decide what they will be doing with their ESG disclosures. And I'm sure that this will follow on into India and many other countries, is that all of these measures need to be digital. Now, by that, these days, in terms of disclosures, what we're talking about is what we term inline XBRL. If you've never seen an inline XBRL document, this is what an inline XBRL document looks like. You can find many on our website, xbrl.org, and look for inline XBRL. Or indeed, you can look at the SEC website, or you can look for any of the ESEF disclosures, which are the new ones that are coming in Europe. And an ESEF disclosure looks like this. It looks like a PDF. And if you look at that, it just looks like a usual kind of report. This is, to be clear, a financial report, not yet a sustainability report. But in many contexts, these sustainability disclosures will be contained in annual reports. Some of those are glossy, like this one. When you get down to looking at numbers, whether that be a financial term as we have here, or whether it be an ESG term, this is information that is both human readable, you and I can read that, but machines can also read that. This particular report contains a viewer, so it tells you that this is IFRS, depreciation and amortization expense. and indeed, depending on what you're doing, that can do that in multiple languages, which is clearly important to most of us as we move around the world. One last point about these things, they are digitally signed, so you can expect that both your corporate management and indeed you as auditors or accountants may well be called upon to certify the contents of all of these materials. So expect that ESG, as for financial reports, are moving to become digital, not least for those supply chain reasons that I described. It is not the case that we can all trawl through paper documents anymore, pull out information, retype it, rekey it, pass it on. We need global consistent standards for the disclosure on preparation, publication, and consumption of all of that information. And this is the future in this field. So policymakers, including groups like ICAI, should be contributing to the international sustainability standards board's considerations in this field. They're starting very soon, and they will continue, I'm sure, for a very long time. And lastly, and very much to echo some of the things that Sanjay said in his excellent presentation, there are some very important opportunities for the accountancy profession in this field. So the next stage in reporting is very much ESG. For accountants in practice and in industry, there is absolutely a need to understand and develop skills and capabilities in this field. It requires a range of new knowledge. It may well require that you develop or employ specialists in particular areas, but the key to manage to this disclosure is developing the new processes and the new controls to ensure that we are producing high quality information that can be trusted and used by a wide range of stakeholders, investors for sure, but also a whole host of other groups within society. So I would call on everyone on this call to just assume that going forward, this will be a very important part of your career. Or it will be a new specialty within your firms or a new division within your organization, very much under the CFO. This is something that it will just be part of disclosure going forward. Over the next couple of years, this will move very, very rapidly, starting at a global level with carbon disclosures. So further, you must assume that you'll be part of either you'll be the recipient of audit on these kinds of measures, or indeed, if you're in practice, you will be doing audit on these kinds of measures. So that's, again, a host of skills, processes, as well as authoritative guidance that's required in order for us all to be able to move forward in this area. And obviously, all of this thing is going to be digital. So be thinking in those terms. And that is another area for the profession, young and old, to start to move towards. All of this is going digital, and if there are areas of uncertainty, if there are areas of unease in that field, it's clearly something that we all need to focus on in terms of education, training, and then success. And lastly, just to emphasize, the supply chain aspects of these measures alone mean that India is absolutely critical to this whole process. So I implore the audience to don't assume that any of this will pass you by. Some of these things might be happening in far off capitals in Europe or Asia, but they're coming to India at a local level, and your most important impact on the world as suppliers and parts of supply chains will mean that you are deeply involved in this. So I hope that is of some assistance. Do find out more on the XBRL website, and if you are interested in this field, do subscribe to the XBRL newsletter, where there's a lot of ESG focus, very much aimed at accountancy and disclosure professionals. So we hope that you find that helpful. And with that, I will stop that presentation, and I hope that is helpful. Thank you very much, Mr. President and Mr. Vice President, as well as my friend and colleague, former President, Mr. Atul Gupta. Thank you very much.
Thank you, Mr. John. Thanks for wonderful deliberations. Very nicely covered that there is an opportunity ESG reporting, and there are 3 pillars: consistency, auditability, and digital. And you also submitted some key opportunities also. Thank you very much with the heart. Thanks a lot for your wonderful deliberations. Now my request to my immediate past president, CA Atul Kumar Gupta ji for taking the lead in the panel discussions on global development and best practices in CSR. And the panelists are Professor Sudhir Kumar Sinha, Dr. Girish Kumar Uppuluri, Venkata, and Mr. Kiran DM. Over to Atul Kumar Gupta ji.
Thank you, Satish ji, and very respected President ICAI, CA Nihar Jambu Saria ji, the Vice President Dr. Devashish Mitra, my very two esteemed friends from the IFAC and the XBRL, Sanjay Rugani ji and John Turner, the Chairman and the Vice Chairman of the CSR Committee, very distinguished, under whose guidance this program is being organized, CA Satish Kumar Gupta ji and CA Aniket Talati ji. All my distinguished panelists. We have the three distinguished panelists for this session. CA Shri Sudhir Kumar Sinha ji, who is the faculty with the IRMA. We have Mr. Kiran, who is the CEO of ONGC Foundation. And we have with us Girish Kumar ji, who is the a consultant with the Valkyriet. That is, he is into this project management related to the CSR related projects. Friends, as you all aware that in the last 1 hour, with the distinguished presence of Sri Suresh Prabhuji, Sanjay ji, John, and even our Honorable President and Vice President, even Chairman CSR Committee, they deliberated number of aspects related to the CSR. They talked about that how the CSR initiated in India, what is the present position and how we are looking into. Whereas the international speakers as well as Suresh Prabhuji mentioned that how we have to move ahead, move forward from this initiation taken by the India and the different jurisdiction. As rightly being mentioned by John, that is carrot versus stick. And the CSR now moving towards the sustainability, that is ESG. Now, friends, when we talk about the ESG, wherein E stands for the environment, S stands for society, and the G stands for the governance, which are the very, very important 3 pillars, not only for the ESG or the sustainability, but also for the corporate social responsibility. Because when we talk about the S in the CSR, which is mean the society, the same way the ESG the S stands for the society. So practically the CSR should be understood with the ESG in a way of a synonymous. Now, when we talk about the CSR and the ESG, number of speakers discussed about the various aspects of the ESG, and there was a discussion whether it is a philanthropic activity. So for the years, when we talk about the CSR activities are being taken as a philanthropy or a service towards the society. But can we say that it is only the values and means the moral values? So it is only the values which we are talking about, or today we are living in an environment when we have to discuss the value with the values, meaning thereby that how these initiatives will be important even for the sustainability of an organization. So when we talk about the ESG, that is the values means the society, the environment, and the value means the governance. So how these three important aspects create an environment when we should discuss about the value with the values. Now, the CSR initiative in the recent past or even from the initiation are being taken as a philanthropy. Somebody was discussing about the reputational aspect, but now, as I mentioned you, that these are becoming essential for the sustainability. Now, looking into the need of the hour, there are the 3 different dimensions which are emerging into the global scenario. The first one is the various regulators who are making this ESG or the CSR requirement as mandatory. You just discussed that the New Zealand has now made it mandatory for all the financial institutions to report on the ESG parameters. Likewise, the European Union, likewise the UK, and even our own SEBI has mandated that the 1,000 top listed companies has to report on the ESG, which we call as BRR, that is the business responsibility and the sustainability reporting. The second aspect which is emerging out for the ESG landscape is about the disclosure norms, as being rightly mentioned by Sanjay ji and the John, that the IFRS trust IFRS Foundation is looking towards the development of these sustainability standards, wherein every company will require to report on the ESG vis-a-vis the CSR compliances. And the third one is the sustainable finance. That is the responsibility investing, meaning thereby that when you are investing somewhere, you have to see whether that particular organization is following the ESG requirement or not. And I'm telling you that with the various reports, today the 33% of the global investment is looking into the ESG indicators before investing in a particular company. That is something very, very important to note down by all of us. Now, friends, with this background, today we have the very eminent speakers, eminent panelists available with us. As I mentioned you, that Sudhir ji, the Kiran ji and Girish ji, who will be deliberating and discussing on the various aspects. I have few questions for them. May I start with the Professor Sudhir Sinha, who has given the entire life on this CSR related research and the other activity. Sudhir ji, how do you see the CSR implementation in India by the organization? Is it only for the values, meaning thereby the philanthropy, or actually they understand, the organization understand the value standpoint as well? So it is whether it is only the values or it is there for the value as well. Over to you, Sudhir ji.
Thank you very much, Mr. Gupta. In the beginning, let me just take the opportunity to address the honorable office bearers and members of the ICAI, the chair of the panel, Mr. Atul Gupta, my co-panelists and learned participants. Good evening to all of you and greetings from Irma. Thank you, ICAI, for giving me this opportunity. I am really honored. Now, coming to your question, Mr. Gupta, well, your question is about CSR implementation in India. But let me tell you that CSR implementation depends on the understanding of CSR. Unfortunately or fortunately, for various reasons or factors, CSR in India is understood or misunderstood as corporate philanthropy. Technically speaking, philanthropy cannot be taken or used as synonyms of responsibility. So there are two terminologies, and also we are confused with. One is philanthropy, means social, and responsibility. The world is completely divided on these two terminologies associated with CSR. While some experts argue in favor of social being the focal point in CSR, there is a big group of experts, including me, who lay focus on R meaning responsibility, and the entire discourse on CSR is around responsibility. Let me give you the logic behind it. Responsibility, you'll agree with me that it is conveniently overshadowed by social terminology. In every discussion and wherever we discuss or in public discourse, responsibility gets sidelined as social is always given more prominence. Why? Because social is an emotional topic and everybody wants to talk. And as we have been listening to previous speakers also, so there is a focus more on social sides of CSR. While responsibility, you'll agree that it appears as a complex management issue. No debate about CSR so far I have at least come across in the last 35 years of my career, which has clarified or answered whether responsibility is a mandatory or a voluntary act. Always there has been a confusion whether responsibility is mandatory or voluntary. It is a manufactured dilemma. To me, it is, and also we have manufactured this dilemma for ourselves. And the key lies in, and if at all it has to be deciphered or the myth has to be removed, then definitely the key lies in deciphering whether responsibility is the moot point in CSR or is social the central theme of CSR. Now let's understand the difference between the two. This is very important to understand because this is where we are making mistakes in India. You'll agree with me that any business activity or business decision creates both kind of impacts. positive as well as negative impacts and externalities also on society and the environment. When it comes to talking about positive impacts, everyone and also willingly talk about that. Okay, we are creating so many employment and creating so much of economy, positive economy and all. But when it comes to talking about the negative impacts and externalities, that's where also all of us like to simply move away from the topic. So what is in it? It is a moral obligation for companies or anybody for that matter to offset or mitigate those impacts. If I'm creating any negative impact, then it is my moral responsibility or obligation to offset or mitigate those impacts. And I'm very happy that Honorable Sri Suresh Prabhuji, he spoke about, he touched upon this obligation. So obligation definitely is a moral obligation. It's not legal obligation. More than legal obligation, it is moral obligation.
Thank you, Sudhirji. Kiranji, before I come to you, I again reiterate a very, very important point that, as mentioned by Professor Saab, that it is again our moral values. So one is the philanthropy versus the responsibility, but both are falling under the same bracket of the moral values. So one is values, the one is value. So how do you see the CSR in India vis-a-vis at the international level, that we are more concerned with the moral values, the moral responsibilities or the philanthropy, rather than it is creating the values? Because what is happening, for example, in case we are not talking about the society, there is an unrest among the workers, there is a problem with the relation with the employees, our product is not healthy for the society. Ultimately, what will happen, we see that there are large number of organizations which could not survive because they don't care of the society. They don't care about their labor relationship, environment, vis-a-vis the other factor. So how do you see that vis-a-vis India, vis-a-vis the global level, that we are more concerned with the moral values as compared to the value associated with the CSR vis-a-vis ESG compliance?
Yeah, good evening, and I thank ICAI for giving me an opportunity to be part of this panel. Guptaji, this is a fantastic question you have raised, because here we are looking at are we creating value for ourselves, or are we deriving value and spreading that moral value with the society? This is the crux of the question you have asked. If you look at Indian philosophy, Sarvo Parama Dharma, Seva Paramo Dharma is something what we always believe, which means whether you are making profit, whether you are not making profit, Seva has always been an inherent quality within the Indians, and I would say business community. Even before the enactment of Act, there are a lot of businessmen. Let us not even only look at the biggies to say whether they are doing something, but even a small petty shop owner also, whether he is making profit or not is immaterial. But when somebody comes for some support, he always does it. Which means here he is more worried about value creation, is not creating a value for himself. So this has been the practice. If you look at, it's been happening in the West. If you look at post-industrial revolution, is when they started looking at, okay, we have been exploiting everybody, so let's look at how do we share something with them. So it is more from a karma perspective that they are trying to do that, rather than a part of being a responsible. So this is a major differentiation as far as I look at the value creation. Okay, let's come to the other part. The SEBI constituted a committee on social stock exchange, and that committee in its reports has said in 2019, the total philanthropic contribution in India was about 70,000 crores. And they also go one step ahead and say the CSR contribution is about 17,000 crores out of the 70,000. FCRI funding is about 20,000 crores. The rest has come from philanthropic trusts and individual contributors. Now, these individual contributors are not forced by law or mandated by law to contribute, but they are doing it because they feel there is a value in what they want to do. It is transforming and doing good for society is what is coming. So if you look at overall, whether we are mandated as CSR or not mandated, there is a thought process of sharing what is there with us. So this is the basic difference, I would say. And because now it is mandated, there are certain things that are happening. Now also look at, if government just wanted to take 2% from the profit, they could have put a cess and taken that money instead of having a committee, instead of having so many procedural things and creating so much of issues for many corporates. But government in its own thinking and wisdom felt that there is a need for corporates to get involved in social transformation. And that's why the mandate has come into play. And because of which there are a lot of examples we can look in, because companies got involved, the results have been manifold. There has been synergy. I will just give you one example of what ONGC has done, and then I will stop at this question. Saraswati River is known to all of us. We feel it is a Gupta Kamini. It is going, under the ground and it is not visible. But there was a research done, and then they said there is a flow of Saraswati River was found. Then ONGC, our basic competency is exploration wells out, and water is available today. This is because it is not only a social responsibility, but we also felt we are using our competency. So when you synergize, there are more than 5,000 hectares of land today cultivatable because of this synergy. So this is where I will end for this question.
Thank you, Kiranji. Giriji, since you are dealing in the project implementations and you are handling a large number of projects which are being started by the PSUs and the other large organizations, so you are actually a project implementer of the CSR. So how you feel that these projects which you are handling are more of a compliance job that, okay, I have to complete the 2% mandate, or it is something that actually creating the value, adding the value to the society?
Sir,
Giriji, you have to unmute yourself. Giriji, you have to unmute yourself first.
I'm sorry. So thank you, Atul ji, for giving me this opportunity, and it is really honor for our trust actually giving us an opportunity to address in the global forum like this. Before I start, I want to give my greetings to Suresh Prabhuji and all elite members of ICAI and my friends from panelists and other attendees. See, before I answer your question, people should know what our trust is about. Brief, just 2 minutes.
Giriji, I will, my apology, because we have very limited time. So you have to give the answer in 2-3 minutes only, please.
Okay. Then see, our trust is a 27-year-old trust and focusing on empowering the young people through programs of psychological counseling, career guidance, life skill and all this. And just to answer your question, I will just brief only 3 projects which recently we have done last 5 years. That will tell you that we are not working for compliance, but we are working for value to the society. One is that Happy Project, that is Health Action Program for Progress of Youth, which is done for 3 years in 120 schools in Mumbai, and there are more than 10,000 students have been trained for this, which has 7 thematic areas. Number 2 is Saksham Project, which for 2 years we did, and each year we educational empowerment of 10,000 students, underprivileged students from 30 government and aided schools in our remote areas of Mumbai, and even launching financial support also through scholarships. And third one, which is very important, which is central government project, Childline Project, which with the support of a Railway Ministry and Ministry of Women and Childhood, UVCT, has operational since December 16, this particular project. And we actually helped more than 5,000 cases have been intervened by our UVCT team in this Childline Project, and is in Kalyan Station, and there's a big process involved, but the who got benefited is more than 5,000 children. Actually, this project. So it shows clearly that our focus is on society rather than compliance.
Thank you, Giriji. I will come back. I would like to come back to Sudhirji. So as we discussed that the ESG, wherein the S stands for the social or the society, whereas the corporate social responsibility also talk about the social. Now, in the recent scenario, how do you see that? What kind of should be the ingredient in the social or the society which creates the value for the ecosystem rather than only the moral responsibility?
Well, you see, S in ESG and S and CSR is just like number 9, as you can see, so which can be read as number 6 as well if turned upside down. S stands, as you know, that as we all know that for social in both CSR and ESG, but interpreted little differently, while it is not, and it should not be so. S or social in both carries the same meaning. It is conveniently, although used and misused both ways. So let's take CSR in Indian context first. Social responsibility is equated with the company's philanthropy responses towards society, mainly in contributing towards education, health, providing water and toilets, employment generation or livelihood opportunity, and so on and so forth. But social in ESG, especially from the perspective of securing global investment in business, seeks companies to demonstrate continuously improved conduct and practices at the workplace, marketplace, and in communities. So ESG and CSR are not different. The meaning and understanding of both are to seamlessly integrate social and environmental dimensions into economic performance by governing them well with the highest level of accountability, transparency, and responsibility. These are 3 important things. So how can a company manage its relationship with its workforce, the societies in which it operates, and the political environment? This is the central question behind the S in ESG investing, the social aspect of sustainable investing. And there are a number of social factors can affect a company's financial performance, ranging from short to long-term challenges. So that we all know. I don't want to get into that. Then there are several examples. Like I can cite you an example. Way back in 2013, when in Bangladesh, Rana Plaza incident occurred. So an 8-story building actually collapsed, from where 28 all top brands, so they were operating out of that. What happened? So the social sector, the social side of these companies, especially companies like Walmart, then Mango, and all, so they were operating from that area. But what they did not actually took the cognizance of the risk they were working with, especially in the supply chain. So that's where their reputation, the brand image, gets impacted. So that's where so I will say that social factors to consider in sustainable investing.
Yeah, that's exactly, Sudhirji. And yes, we can see that out of the 6 criteria for the evaluation of the ESG, one is the ESG integrated index, which is being used by the investors and the managers today to see the viability of an investment before they are recommending to their clients. Kiranji, since you are the CEO of ONGC Foundation, which is a very, very important organ in our country, would you like to discuss some unique initiative taken by the ONGC in the CSR project, and specifically in this COVID pandemic era? I request a very brief answer because we are short of time and we have a lot of questions in my pocket.
Yeah. ONGC has been supporting various projects during various crises from even before CSR Act. So this time when the COVID hit us with the COVID phase 1, also there was a lot of relief we did, but it was all more related to distribution of food, rations, and masks and things, because at that point of time, that was a major lacuna that the society faced. But in wave 2, the entire concentration changed into how do we support the medical infrastructure. And immediately we jumped with the district administration in various of our locations. We are spread out of 18 states. So we worked in with many of these district administration to expand the medical facility in the districts. And also looked at how do we support the extra space what we had, whether it is in our colonies or in our other office places. So this was one of the things we did. Then we are also now procuring and installing oxygen generator plants in about 20 district hospitals across the country. Majorly, we have also worked with NGOs to create COVID care centers. The moment wave 2 started, there were a lot of pressure on the hospitals because everybody with influenza wanted a bed if they are COVID positive. Whether they required or not was a secondary thing, but they wanted to get into an hospital. So this created a lot of a pressure on the system. So what we did was we worked with various NGOs to create COVID care centers wherein up to oxygenated beds were available. So we started working with them, then counseling and all. Then we also we worked with a lot of NGOs to create helplines, doctors on consulting online, then also counselors consulting online. So these kind of things, we started looking at it. And I'll tell you, for us at this point of time, it is not whether we are able to spend the 2% or not. We are spending more than 2% when we wanted to get into all this. So that's where we are.
Thank you, Kiranji, for your valuable contribution to the society and the organization ONGC Foundation. We all appreciate for the same. Girishji, since you have a lot of experience of the project implementation, how do you feel that what kind of a policy change or something we should see in India to bring the more value in the CSR projects?
Oh, thank you. See, the heart of this question is NGOs. NGOs need to survive, to work for society. Now, most of the time, they are all non-profit organizations. They need to have continuity in projects for longer duration. People who work in the NGOs of these projects are all well-qualified bachelors and postgraduates in social work and development studies. When you compare them with their counterparts, what they get is very less, and the jobs are always on project based, and which their professional life is always on temporary mode or uncertain. So here, what I am thinking is encourage people to go for CSR route. There should be a big paradigm shift in policies and CSR projects term of instead of 1 year or short terms, it should be longer period. There should be a balance, and government has to pitch in and provide social security for these CSR professionals, because without them you can't implement a CSR project, and no NGO can survive. And most of the time NGOs also get CSR projects through corporates and sponsors when they want, but experienced NGOs should be able to approach the sponsors and get the support, which is not much encouraged in India as of now. So we need two-way communication, and it's not that only when we get, we should also go and seek investment or sponsorship. That is the major shift, which is not there now.
Sir, certainly is a need of the hour, and we certainly take it up. Sudhirji, I have one more question for you. Recently, SEBI issued a circular and mandated that the top 1,000 listed companies has to report for the ESG, we call as BRR in India. What kind of a challenge you see in the implementation of that?
You see, there are two challenges. Number one is that not many companies are knowing about NGRBC. I'm sure actually NGRBC is not very popular in our country, and the major problem has been created by the Ministry of Corporate Affairs itself, because it has given two instruments. This is one, NGRBC. Earlier it used to be known as National Voluntary Guidelines. Now NGRBC since 2018. It has 9 principles and 53 core elements. And this is such a beautiful instrument and you can say standard, which is in alignment with the global popularly or well accepted instruments like ISO 26000, GRI, and even ESG frameworks, etc. But problem is that, and also here in India, people don't know much. Now the companies are taking this as a simply compliance thing because SEBI has made it mandatory, so they have to comply. So what companies are doing? Companies are taking the services of consultants, and consultants are simply giving them report prepared as BRSR now. Earlier it happened to be BRR, now BRSR. So this is a major challenge, but I'm quite optimistic. Companies definitely, after going through these 9 principles, they will find more values in it. And this NGRBC is going to create more sustainable values and also shared values for all.
Thank you, Sudhirji. Over to Kiranji. I have a very interesting question for you because you are also a public sector undertaking and who is looking for a lot of investments. Sustainable investments or the responsible investing is the buzzword today. And everybody is looking for all investors are looking for ESG factors integrated in the investments. And there are a number of bonds also, which are being issued by mutual funds, launched recently. Even the SBI and other bonds are there. How do you see this development at the global level and vis-a-vis the India as well?
I think as an instrument for right investment, I think this is a fantastic move that is happening for 2 reasons. One, if you look at responsible investment or sustainable investment, means it is a long-term related investment and it is not looking at short-term things. Number one. Number two, in the last 1 decade, if you look at, there are a lot of the new vertical that is coming out as a social enterprise. So they are looking at how do we create sustainable solutions and solutions for the problems that are existing, which is going to be a new vertical. And if you look at from an Indian perspective, the SEBI is a social stock exchange itself is a movement towards that, because that is where it talks about impact bonds and a lot of other things which are indirectly saying the business to be part of the social development. This is part one. Part two, on a regular business vertical also, this becomes very important because you are putting a caveat to the investment saying that, okay, if you are doing good business practices, then I'm going to invest. So that is a kind of a thing which will definitely work with the the new generation youngsters. It's going to work with them.
So Kiranji, when you are investing next time, you will look for the ESG index of a mutual fund or not?
I will definitely look at it, and not only when I'm investing, but when I'm as part of CSR investment. If you want to do in any of the activities, I would look at how do we bring in these principles.
And even I'm like a good news for you, sir, that the mutual funds or the bonds which have looking into this, they are performing well. So there is a Bloomberg report which is showing that even the returns are the buoyancy in the returns are there when you are following the ESG factors integrated. Thank you, Kiranji. And now, Giriji, last question from my side to you for the today's session. For you, what policy intervention you feel that we should suggest to the government to bring more value addition in the CSR projects? A very brief answer.
Yes, sir. This, as far as the government is concerned, I have already responded in my previous questions. But here, what I want to know, even ICAI, your organization also can play a role of supporter to NGOs by providing timely and periodical auditor guidance so that the project financial omissions and commissions can be addressed before it becomes too late to make any mid-course correction. Every NGO for every project on quarterly basis needs to submit audited utilization certificate of funds by CA. But in many cases, at the end of the project, sponsor asks third-party audit withholds funds to the NGOs. This practice takes a lot of time and anxious moments for NGOs. Once a CA has certified the accounts, why again another audit? This practice should be looked into. This is as far as from NGOs point of view, I'm talking, not from controls and all this, because once it's done, it's done. NGOs' main focus is always on objectives for the project and successful execution. But in that journey, sometimes there will be some deviations in the expenses from the allocated heads, but overall project costs are not exceeded. Here, CA should play a different role. Rather than looking only at actual expenses were budgeted, overall project objectivity should be looked into along with the financial aspect so that NGOs are not at loss of funds.
Thank you, Girishji. And I believe that Aniket Bhai is noting down this suggestion and will take care in his concluding remarks when he will be summarizing the entire session. Sudhirji, I have one more question for you. If you allow me to ask you, should I?
Entirely up to you.
Sudhirji, recently you are aware that there is a policy change when it is being mandatory for the companies falling within the purview of CSR that to create the liability for the unspent money. Any positive impact you see from the change in this policy for the sincerity towards the CSR?
Couple of things are there. Number one is that definitely it is going to create positive change, because earlier it was limited to either you comply or explain. So now the explain part has been taken out. So company with this amendments companies have to spend money. They cannot run away with this thing that, okay, by giving expenses that are because of this factor or that reason, we could not do it. So the government has done a very good thing that it has made it mandatory. Second thing is that, it depends on the positive change which you are asking me to actually speak. It is just like, so Hriday change of hearts not going to happen soon. Companies definitely have to, change their heart. It is just like a kind of a Bollywood movies at the end when, you have the father of the actress accepting the poor guys, and this happens in movies only. So what I mean to say that change of heart definitely is a moot point. If that happens, then only automatically. So then you don't require any act or laws, right? So it will happen automatically. I think I'm quite optimistic. This will happen sooner than later. So let it be so.
So Sudhirji, in like a movie, the father of the girl finally agreeing with the poor guy. But I can tell you that it is only the values. But 1 + 1 will become 11. It is the value which will the father will get once he will agree with the request of the daughter.
Absolutely, so, absolutely. That realization has started happening by some companies, and which is why some companies have internalized and integrated corporate social responsibility in the way it should be. But for some companies, rather majority companies, it has not happened.
So in a nutshell, with this panel discussion, what we can say that there is a urgent need to move the dimensions that we are not only looking for the philanthropy, we have to see it's a responsibility. And then from responsibility to the value addition, that the sustainability of the company, the sustainability of the operations will be there. Once you are following the CSR, once you are following the ESG, is actually the takeaway from this entire discussion. I have one question from Sanjay ji, though it's a surprise question for Sanjay Rugani ji, because it was not scheduled. But Sanjay ji, how you see this entire discussion and vis-a-vis the disclosure standards, how much time it will take to have the disclosure standards at a global level will see the light of the
Right, I hope you can hear me.
Yeah.
Right. So I think, we will start with some steps. We will not get to the end solution immediately. But what will happen in terms of disclosures is there is a big move. And I think one of our colleagues, John Turner, spoke about it. Clearly there is a standards board that has been set up. We are looking at, ESG as a big commitment. There are different models. We are also working with the Global Compact, UN, at the moment. My sense is before the end of this year, we will have a limited ability to look at global standards, from one lens, certainly. So we will converge, because today there is like 4 or 5 different discussions and models. I liked what John spoke about. It's also about digitizing the engagement, because that's going to be very critical. Actually, Atul Kumarji is very interesting. One of the thoughts in my mind was that I was going to call Niharji tomorrow and say, what's going to be your scorecard? Because I think ICAI actually, I can tell you that 10% of the global accountants, come from one body in the world, and that is ICAI. If ICAI is 10% of the global accountants and you want to champion this, I mean, clearly we have to take the role together. So I want to say, I want to partner with you. From IFAC perspective, clearly it's a big mandate from our side. And we will come up with some basic concepts because we need to take some steps. We can't just make it very complex. So yeah, this year we have to do it.
Thank you, Sanjay ji. And you are since chairing the very important committee, wherein our more than 50% members are in the industry only. So you have more responsibility and the challenges vis-a-vis. And we have the John as well. Though we don't have the time right now.
Kumarji, I also want to just encourage everybody that next week I'm going to send out a report on this with some insights. Thank you.
Yeah, thank you, John, Sanjay ji. And since we have now the time is not there, but we appreciate the presentation given by John about the digitization initiatives for the ESG, which will work hand in hand, shoulder to shoulder, to see that the real purpose of this ESG reporting is being achieved when the comparability will come, when the analysis will come, and it will become more fruitful for the organizations as well as the other stakeholders. Now over to Aniket Bhai for giving his concluding remarks, being the Vice Chairman of the committee for the this entire 2 hours marathon exercise done by the ICAI under the able leadership of Honorable CA Nihar Jambu-Saria ji, the President ICAI. Over to Aniket Bhai for your remarks. It was exactly 7:57 was scheduled.
Thank you so much.
I have to hand over to you.
Thank you so much, immediate past President Atul Gupta sir. I think one thing we all have to learn from him is time management, and the M2M that was sent to me was very clear that 7:57 is when the vote of thanks should commence, and so I will most definitely endeavor to finish it at 8:00. Let me start off with that. Thank you so much. First of all, to the leader of our profession, the almost 3.5 lakh chartered accountants and almost 1 million students, our President, Honorable Nihar Jambu-Saria sir. Thank you so much, sir, for being with us throughout the session, for guiding in terms of the perspective that you were able to share with regards to the ESG implementation, the Sustainability Standards Board that the ICAI had led last year, and even this year we are now represented in SEBI through the board. Let me also share with you, Sanjay ji, you brought up the point on ICAI and the sustainability. Under his leadership, he sets this by person. His personal leadership has ensured that even his car is a eco-friendly car. So he's using even a vehicle which is an electric vehicle. So I think that's where you should know where it starts with. So charity begins at home. And for us, charity begins with our leader, Honorable President, sir. And he also has set up within the infrastructure committee a separate group to assess how all our branches, regional councils, the 100-odd infrastructure properties that we own, how they can be sustainable through solar and other means. So yes, when IFAC is looking at this, you will not see ICAI wanting. ICAI will be leading with our leaders in the form of Nihar Jambu-Saria sir and our Vice President Debashish sir. I would also like to specially thank our immediate past President, the IFAC board member Atul Gupta ji, for wonderfully leading the discussion, engaging all the participants, sir. It was truly very precise. The questions asked were, I think, very appropriate, and I think extreme important discussions that happened, especially for somebody who's not involved in ESG in day-to-day matters. It gave a great insight on what the future holds. I would also like to specifically thank the Honorable Minister, the Cabinet Minister of the past, the Member of Parliament, the Prime Minister's Sherpa to the G7, G20, a man with immense intellectual capability, but also a person with a heart of gold through his own trusts, through his own activities. The Honorable Member of Parliament, Suresh Prabhuji, has led by example. Thank you, sir, in absentia. My special thanks to all the panel members. I think Sanjay ji started the session, very rightly mentioned about this concept of seva, which is imbibed in India. You may look at the Dharmada, which all businesses have been charging since time immemorial. The Zakat, which some parts of India, they are charging. This has all been, charity has always been a part of our culture, and it's only getting amplified today. To John, I think, thank you for sharing a wonderful perspective of the digitization of CSR, of how ESG reporting is going to move. we are thankful for you to spend 2 hours specifically on this weekend and to be with us in India. Thank you very much. We really appreciate it. To Professor Sudhir Sinha ji, Dr. UV Girish Kumar ji and Kiran ji, thank you for all the insights, your practical experience, sharing all of that. And finally, but most importantly, to the leader of this CSR committee, the chairman, Satish Gupta ji, under whose leadership this entire program could be convened. Let me share with you, all participants, he has worked tirelessly in the entire week to ensure this event can be done flawlessly. So Satish ji, the entire credit for this event goes to you. Thank you, all the participants. Thank you, all the panelists. Have a great evening. Thank you so much.
Thank you, Aniket, for wonderful thanks. And thank you, everybody. Thanks a lot. Thanks. Thank you, Atul sir, for conceptualize all the things. Thank you very much, sir.
Thank you.